Debbie Marcoux is licensed by the California Department of Business Oversight under the California Residential Mortgage Lending Act, NMLS ID 237926. Also licensed in Arizona, 094-1504, Georgia 69178, Illinois 031.005-8339, Nevada 57237, Oregon, Tennessee 184373, Texas, Washington, MLO 237926, Heidi Slade Points, California, DBO 1666881.
She's the mortgage mom. She can get things done when you're in need and don't know where to go. Pick up the phone and call mom.
All right. Well, welcome to Mortgage Mom Radio. I am Debbie Marcoux, and as always, I've got Heidi Slade Points with me.
Hello.
And what are we? We are Mortgage Mom Radio. We come to you live every Wednesday from YouTube at 5 p.m. So if you guys have your questions and you want to ask those, make sure you follow us. Go to YouTube, search Mortgage Mom Radio, find our channel, subscribe, click that notification button so that you know when we're on, because that is how you're going to get your questions to us. Go ahead and put those right into the feed. Matt's going to read them out to us so that we can actually answer those questions for you. You can also watch us on Facebook and Twitch. So if you are the gamer, you guys can watch us on your favorite platform. Anyway, so we are Mortgage Mom Radio. I'm Debbie Marcoux, the Mortgage Mom, and Heidi is my right arm, my left arm. If I lost her, I'd be lost. You're not allowed to go anywhere. We are ride or die till the end.
Yes, absolutely.
I tell her all the time, like, you're my ride or die.
Yes, definitely.
All I can think about is, what is his name? The big guy in the movies. Matt, what's his name from the, those Fast and Furious movies? Vin Diesel.
Vin Diesel. Wow.
Yes.
Vin Diesel.
You are my Vin Diesel.
There you go. Perfect.
Anyway, so what do? We answer your questions and we talk about mortgage, real estate advice, all that good stuff. Anything you guys are thinking that you have questions about, we're here to help you. I'm going to actually use this episode to read emails that I've been receiving and then answer those questions for you. So you can get a good idea of, if you ask us a question, how do you get a response? And a lot of times what other people are thinking, you might be thinking that same question. So it's very valuable for us to be able to bring questions from our listeners to you so that you can kind of get an idea of what you can ask, or maybe it's something that you were thinking or you were wondering. So we're going to actually do that here in this episode. But right now it is catching up with mom time.
Yes.
I only get to see you once a week. I mean, literally,
I know.
when we do this show, I only get to see you once a week. It is so weird. I don't like it.
I know it. Honestly, I'm like, okay, I miss going to the office. I miss seeing Debbie. Like it's crazy. I'm definitely going to have to plan a trip just down for a weekend, and we're going to have to do something because it's so strange.
I know. Or maybe like once a quarter, you need to like fly in and stay for a week and work from the office. And
absolutely. We could do that.
Yeah.
Make it a quarterly event.
Yeah. So I can tell you my catching up with mom is that I am exhausted. I am so tired. I did finally get my bed. So my bed is all connected and working and we're sleeping in bed, which is amazing. But it's still just been all of the, put everything that away that was all packed into one room like it was a storage unit, getting that back to where it goes, going through. And what happens is that after you've been in a house for 5 or 6 years, you've got so much stuff that accumulates that you don't need anymore. So I actually had the junk guys out to pick up junk and trash about 3 different times.
It's amazing how much stuff you collect and keep. And when you go through something like you just went through, you realize, like, where have we been keeping this and why?
Yeah, I have no idea, because when we moved back into our closet that we had to move out of to be able to put new carpeting in there, now we can't get everything back in that used to be. So how we did it, I have no idea. But yeah, so it's just, I feel like I've been moving into a new house. I feel like a buyer that just bought a house, even though we've been living there for 5 or 6 years. So I'm tired. It's like I go home every day and it's something new, and the pictures had to come off the walls because they repainted. And so now you're trying to rehang the pictures, and they patched all the drywall, which is fantastic. But now I got to find that stud, and I've got to put that nail back in the wall. So it's, I'm tired. It's been a long week for me, but it's coming along. I'm super excited. It feels great. It's almost done. They're finishing up the painting on the outside of the house today, and then it should be, pretty simple, just small things here and there moving forward. So
Well, it's almost like you are moving into a new house. You got a lot of work done that needed to be done,
Yes.
right? The age of the house, everything, how long you've been there. And now it's almost like a refreshed new
Yes,
house.
yes.
That you know.
Yes, definitely. And anybody that has gone through a renovation, so it's a little bit different when you're moving because most of the time, unless you buy a fixer, most of the time you're just moving in. Like you moved to Arizona, your house was fantastic. It was amazing.
Yeah.
You just moved your stuff in.
I just moved in.
Right,
Done.
right. We're working around 2 dogs and Zeke, and then the older boys and contractors in and out, and things just getting done and happening. And so it's a little bit more traumatic when you're actually living in the house through the repairs. So anybody that has been lucky enough to buy a house that is completely done, congratulations to you.
Absolutely. And that's what I had said when we moved here. I said, I am not doing any house that needs anything done. I don't care what it is. I'm not doing it.
Yeah. Yeah.
We're moving in, done.
And there's 2 sides of that coin, right? I mean, it is super cool that I was able to pick out everything I wanted and do the colors that I wanted. And at the end of the day, it's going to be exactly what I put together and what I had in my mind. And, where you're moving into something somebody else did, which obviously your home was beautiful when you bought it. So
right.
Guy
We got
had
very
great
lucky
taste.
that the guy had amazing taste. So we were very lucky.
Definitely. So, there's a lot of people out there that say we want a fixer-upper, we want to buy a fixer-upper. We can talk a little bit about renovation loans. If you're out there thinking that in your mind and you don't know how in the world would you buy this house, get the money to do those repairs, renovation loans do exist. They are around. They are happening. Give us a call and we can go into those details with you. So remember, we are a mortgage advice show, and the things that we've got going on a lot of times in real life will, relate to other people listening. So that is definitely something that can happen. And those renovation loans can be for investors. They can be for second homes. They can be for primary residences. So there are ways to get the cash that you need to do the repairs on, even if you don't have it. So, definitely something to keep in mind. And that goes for a purchase or a refinance. That possibility is there. But renovation is, it's no joke. It is no joke.
No, it's tough. It's definitely tough living through renovation. So I'm, not envious of you at all.
Yeah.
I love everything you've done.
Yeah.
But I would not want to live through. I mean, I've got 4 cats, 2 dogs, 2 tortoises, a kid. No, I wouldn't make it. I would not make it.
Did you say 2 tortoises?
Yeah.
I thought you only had 1.
No, that's why I have babies every year.
Oh, look at you. And how many cats?
4.
So you're right up there with Matt. How many do you have, Matt?
4.
Oh my goodness. What is it with you cat people and 4 cats? Who needs 4 cats?
Nobody. Absolutely nobody.
But you just do it anyway. They must just be,
Yeah.
you get one and it's not enough.
For a long time, the shelter really, really just had their claws in me. Like, oh, but this one really needs a home.
I absolutely love it.
That's where I got my number 4. Hey, by the way, Aunt Lori says hello.
Oh, well, thank you for watching us, Aunt Lori. Appreciate it. I love it when my family pops in. We if you have questions, let us know. I know you were thinking about building your she shed, so we can always talk about that. But yes, thank you so much for watching. Really, really appreciate it. Everybody out there listening, guys, if you want to be able to ask us your questions live, you want to get a response, all you got to do is watch us on YouTube. We're on every Wednesday at 5 p.m. Just go to our page. You can search Mortgage Mom Radio, like our page, subscribe to the channel, and turn on your notification button. That way you know when we do go live and you don't miss us. You can watch us on Facebook, like I mentioned. You can watch us on Twitch. So if you've got a favorite platform, you can watch us in either place. Ask us those questions. Matt's on top of it. He's watching the feed, and he's going to ask those questions when they come out. If you're just there and you're watching and we don't know you're there, give us a thumbs up, give us a hi. We'd love to know that you're there and that you're part of the show. So we are going to talk about questions because we get a lot of them, a ton. And yes. I want to read some of them because this is exactly what it would be if people were watching us live and they were putting them into the feed. This is exactly how it would go, because I get the email and I've got to type back, right?
Right.
not
exactly.
There's not an option there. So I'm going to get into my first email that I received, and then we'll, kind of go from there and talk about it. I think it's great. So this question came from Jeanette. She said, I have been listening to you for a while now on Go Country, but today was the first time I watched the stream, and it motivated me to reach out. So that's awesome. We love it. You guys,
Nice.
hey,
I love it.
the stream is there, man. It stays. It's on YouTube. You can find every single show that we've done. We've been doing these live YouTubes now, I'd say, when did we start? Maybe February or March,
That's what I was
maybe?
thinking.
Maybe earlier.
Maybe earlier.
Maybe
I think
earlier.
maybe earlier.
Yeah, it might have even gone back to maybe before Christmas last year. I can't really remember, but every show we've done every single week is there. And so if you guys want to go back and you want to listen, you want to watch, you guys can always go to YouTube and watch all of the shows that we've put up. The other thing is that we take this same show that you guys are listening to either on YouTube or you're listening on Go Country on Saturday, and we put it to podcast. So if you're a podcaster and you just like to throw that podcast on as you're driving to work or you're cleaning around the house or doing your, whatever it is that you have happening and you like to throw those earbuds in, just look for Mortgage Mom Radio. Anywhere at all that you can find a podcast, you can find us. And you can go back as many episodes as you want and listen to everything that we've had to say. This is free education, guys. It truly is. We're talking education. We're giving you advice, talking about the market. Last week, we talked about property values. Do we think they're going to drop? Should you refinance? Should you pull cash out, right? It was actually a really interesting show last week. So definitely, if you're out there and you're listening to us and you want to know more, you want to go back to previous episodes and you want to learn, do that. So podcast, YouTube, or obviously tune in to us on Go Country on Saturday mornings. So, okay, so that's how she started, which was fantastic. Thank you so much, Jeanette. Appreciate you watching our stream. She says, me and my husband are first-time home buyers, and my husband said many times, I don't know what I'm doing. I get that a lot. That's usually the first sentence. We have no idea what we're doing. Would it be possible to make an appointment to hear from professionals how best to navigate the home buying process as it pertains to our situation? It would make us feel a lot better that we weren't getting into this thing blind. Thank you for your time and hope to hear from you soon. So, it was just a great email. I think that the majority of people that reach out to me through email, through Facebook Messenger, wherever they're sending that message from, I think they're really surprised and shocked when they see my email come back with an answer.
Oh, absolutely.
Right.
They are shocked. They don't believe it. And, so piggybacking off of that.
Yes.
I took a call for you yesterday.
Yep.
At 1:00, right?
Okay. Yep.
Or
It was
today, or
yesterday at
whenever.
1. Yes, because
Okay.
part of the renovations made me run home and I missed the call.
Right.
Yeah.
Okay. So it was the greatest beginning of the conversation. She answers the phone. And I said, this is Heidi from Mortgage Mom Radio, and we have an appointment. Debbie had to run out. She apologizes, and she giggles.
Yeah.
And she says, oh my gosh, I had seen you guys and I had heard you guys. So then I started watching and I thought, these girls can't be for real. She goes, and then you call and I hear your voice and you're real. So I was laughing. And she goes, but I thought, you know what? I've just got to make a call. I called my lender and I want to do a cash out, yada, yada. She goes through her thing and she wants to do a cash out refinance. And they said, I'm sorry, we're not doing cash outs.
Yep.
And she had called a couple other lenders, many lenders. And they said, we're just not doing cash outs. So we start walking through a scenario and we get to a point and go through everything. And I send her the information and she says, oh my gosh, I'm so glad I called you ladies because I really thought you weren't for real. I mean, who's Mortgage Mom Radio?
Debbie Marcoux, that's who. Heidi Slagle Points, that's who.
Right. So it was so great because she had heard us and then watched us and just finally decided, like, I'm not getting anywhere. You know what? Let's see if these girls are for real.
Right. Yeah, no.
So-
and we're not, we're not magicians. I mean, if it's, sometimes it is a tough situation, somebody else has said no, and we're going to say no as well. But there are many times that we have fixed a lot of loans and being able to get things done for people that they were told no. And so it really is beneficial to still reach out and at least ask. So I've heard that a lot. Every mortgage company is doing something a little bit different right now. I've said this to a lot of our clients that are in process at the moment, and I'm going to say it again to everybody listening. With interest rates where they are, it is taking longer to get a loan done. There are more loans in the system than there are people to underwrite them process them, get them into docs, draw the docs, get them to escrow. There's more people than what escrow can handle, more people than what the notaries can handle. Everything is very delayed right now. And loans really are taking almost 60 days. I mean, very, very close to 60. So, every mortgage company is going to do it a little bit different. They're going to all try to figure out how to slow down the pipeline. How do they,
Correct.
get the volume of loans that are coming in reduced to a manageable position? And nobody wants to be in the middle of a loan transaction for more than 60 days. I mean, realistically, when you're this busy and interest rates are as low as they are, you are truly willing to wait to get that rate, to save that money, to save on that interest. It is worth it. It definitely is. But when you're talking 90 days, 120 days, which is where a lot of mortgage banks and lenders are, and even big banks, a lot of them are at very long turn times right now. The, different mortgage companies are trying to still give a particular service level to their clients. And so how else do we do that for you? And so some of them have opted to not write certain programs. One of those programs being a cash out. Some of them have opted not to do bank statement programs anymore. Some of them have opted to not do renovation loans anymore. They're all coming up with something that they can cut out of the puzzle to try to put more effort into another place to get things done quickly and provide that service.
Right. And that all makes sense. Is not every lender or bank or mortgage provider can do every program either. And they have to decide what they have an appetite for and what they can truly service and continue to provide that customer service that everyone's looking for. So just because one lender doesn't do it, one does, it doesn't make them better or worse. It's just simply, what are they in the market for? What is their niche? And what do they have an appetite for? And where are they at?
Right. Oh, absolutely. And, some of them have increased interest rates so that when you call and you get a rate quote, your rate's not, the rate they're quoting is not nearly as good as maybe another lender may have. There's all kinds of different ways that they have gone about how do we slow down the volume. Some of them, be really careful with this. They'll quote you a fantastic rate, but they won't lock you in until you're almost at the closing table. So others are making you do a longer 60-day, 90-day rate lock. And that is to make sure that they can get the loan closed during the time frame at the rate that you wanted to lock in and guarantee you what they've promised you. And when you do those longer rate locks, those rates are going to get a little bit more expensive. And so there's just so many different pieces to it that we want people to reach out, ask the questions. If you've been told no, don't take no. At least call us and let us at least try to explain why they're saying no. Because a lot of times people get no and they don't know why. There's no explanation. Sometimes
Correct.
It's just silence. Sometimes they just never call them back. I mean, I can't even tell you how many times I've heard that. We will at least explain to you what the problem is, why it's not going to work. What do you need to do to prepare to get ready to do this again, in the future? How long is it going to take you to get there, right?
Absolutely.
One of the things that you and I talked about a little bit earlier today is you said that you had a client call today that they're going to get transferred to your neck of the woods. They're going to Arizona and they want to buy a house. And so, explain that a little bit as we're talking about preparing.
So both the husband and wife, they're actually recently getting married. So they're trying to prepare to buy a home out here in my neck of the woods. They're both going to be able to easily transfer with their jobs. So
Her
that's
neck of the desert, by the way.
My neck of the desert.
Her neck
Not really a lot of woods around here.
Her neck of barren rocks and weeds.
Yes.
Okay, keep going. Hey, California, that's why we pay for you. Just letting you know.
Right. Exactly. So we know that they've put some money aside, their jobs are stable, they've been in the same career for a long time, they can, relocate here, but they know their credit's not quite where it needs to be, but they don't know really where to start. They're not sure, should we pay off these collections? Should we not pay off these collections? Should we, one of the questions was, Heidi, I talked to this debt consolidation company today, and I said, oh, heart attack. I'll be honest, I didn't even let her finish the sentence. I said, no.
Yeah. And if anybody wants to know more about debt consolidation, call us because it's not something that we recommend.
So, I just cut her off. I was like, no.
Yeah. There's debt consolidation loans That's okay.
Yes,
Get a loan,
that's
pay off your debt.
okay.
But the
That's-
debt consolidation companies, let's talk please before you decide to do that.
And we went into that. I said, if you're getting a loan to debt consolidate and then you're making one payment because everything's already been paid off, that's great. I go, we can talk through that. But what you're talking about, no, let's just move on. So I said, I go, look, I can't, because she's like, should I pay this off? Should I pay that off? Should I start making payments for this? Should I do? And I said, whoa. Until I see what you have going on, I can't really give any advice on what's going to help you or hurt you, because some of these collections, you've got one you're talking about 7 years ago. You start paying on that now, it's going to become current, and it could adversely affect you, not help you. So, let's start the process. Let's do your application. Let's run the credit and see what we need to do to get you to where you want to be when you're ready to buy that house when you transfer here.
Right.
Let's not just start guessing. And then, of course, she talks to one debt collection company, and they come out of the woodwork.
Oh, yeah. Absolutely. So, okay. I no, but I love that. And that is a part of, preparing for the future. One of the things that you also mentioned as we were talking earlier today, because believe it or not, guys, we have absolutely no idea where we're going with the show before the countdown stops. When our ballerina stops dancing to the Mortgage Mom theme song is when we realize what we're going to talk about. But every now and then we'll be like, hey, what's going on this week? What do you think? Got any ideas? Right. And so one of the things that you mentioned too is, actually talking about getting people prepared for 2021. And I can't even believe we're saying 2021 right now, because it feels like 2020 just got here. But, you should be preparing for 2021. And, if you're thinking about buying a house, or you've been wanting to refinance, but you couldn't because you had some credit problems, or if you want to buy because of credit problems or down payment, if you don't prepare, you're not going to get there. Right.
Yeah. I actually had a conversation with a client and said, okay, well, what have you been doing to help increase your credit score since last time we talked? Well, I'm just making my payments. And I was like, okay, so let's talk about what we need to do for next time.
Right.
Because yes, making your payments, absolutely. Always the first start, right? Keep everything that's current, keep making your payments, but need to figure out what else you need to do, because just making your payments current and working on that, that's not going to really boost you that fast. That's a very long-term plan.
Mm-hmm.
So we really have to talk about what you need to do to get where you need to be. And unfortunately, just keeping current moving forward isn't going to really get you there that fast.
Right. No, absolutely. Totally, completely agree with all of that. You hit it on the head. All right. So let's get into the next email that I got. Okay.
Okay.
All right. So the next one is from Art. He says, I'm looking to refinance. Property is in Orange County, value $2.5 million, 0950. Currently have 3% fixed with 10 years to go. My accounting says I need to be under. So I think he's talking about his accountant. My accountant says I need to be under 2.5% fixed APR with no cost to justify. Good credit. Can you help? And so, that's a great question, right? And he kind of laid out there what he was looking for. And, most consumers, people not in the mortgage business, have no idea what it takes to actually run a rate quote, right? So he got an email back from me almost immediately from his question. And I said, okay, I'd be more than happy to run that for you. I need to know, do you include your impounds? I need to know exactly what do you think your credit score is. I mean, good credit, there's a difference between a 680 and an 800. He's in a jumbo loan, so that's going to be a big difference. Conforming loans, you get the very best pricing as long as you're 740 and above on that credit score. A jumbo loan, you get different pricing from 740 to 760, from 760 to 780, from 780 and above. So, I had to ask him a couple of more questions. And by the time that we were done, I emailed him back and I said, you know what? You're in a great spot. It absolutely does not make sense. I can't get you into a loan that is at 2.5% for a 950 loan amount right now. Fixed for 30 years or even a new adjustable rate. We just don't have that. It's just that the rates are not there for those jumbo numbers. So, I told him very good chance he could find a rate lower somewhere else. A lot of times with these big jumbo loans, most of the time you get a little bit better pricing from a bank, from a direct bank. I've found recently that, Union Bank really seems to be knocking it out of the park, just being in the industry and listening to what, who people are talking about and who are having good experiences. And, so if you're in those really high dollar numbers and you want an adjustable rate, you want interest only, and you want some of those, kind of big jumbo key pieces to lending, Union Bank is a great place to go. So I'm always going to try to also provide some sort of, hey, I can't do this right now today for you, but maybe try here and see. Because if I can get somebody on the right path, they're still going to remember us. They're going to remember that we did them a solid.
Well, absolutely. And that's what we're here for, right? Advice. If we can't do it for you, we're still going to try and direct you down the right path to accomplish your goals if it's possible.
Right. Absolutely. So that was a great question.
That was excellent.
Yeah. So let's get to another one. Let's see. I have a ton of them. Okay, so here's another one. I get a lot of these, and I get them almost every day, probably 3-4 a day. And I just absolutely, it's probably my favorite part of the day is answering people's questions because it's, it's cool.
Right.
It's like I'm helping, right?
Right.
So this one's from Joe. He says, I have two houses, one with 150,000 balance at 4.99 rate, the other at 120,000 at 3.875. My question is the interest rate low? I was thinking about refinancing to a 15-year for one house or maybe do both on a 30-year. Not quite sure what to do. I've got about 26 years left on my current loan. So Joe had a lot going on. And
Right.
He actually got an email back from me that said, can we talk? Can I call you right now? Because there was just too much going on in that scenario for me to have even been able to kind of start to give him the advice that he needed. So what it was is it turned out that he's got two homes. One is for him, one is for his son. The house that he lives in, he only owes about $120,000 on, and his rate is at 3.875. And he's already, he's about 26 years into that loan. And his goal is that he wants to retire. And for him, everybody's got a different retirement goal. We talked about this, I think, last week as well on the show. Sometimes you just want the lowest monthly payment you possibly can get because you know you're never going to pay the house off and you want to be able to live comfortably through retirement. So you're going to put it on a 30-year fix at the lowest rate you can, drop your monthly payments and be done with it and retire and have a great life. Go golfing.
Right.
And then there's other people that their goal is to pay that house off. That is their goal. And so, how long do you have before retirement? We go into all those things. So we did talk about putting him, he was at, 15-year fixed, 2% range. We're talking about, it was kind of like mid to high twos. And it was going to save him, the payment was going to be about $100 less than what he pays today. And it was going to cut him down from 26 years left to 15 years. So it was going to save him about 10, 11 years, right?
Right.
So that was very beneficial for him. Then the other house that he has is his son's house, and his son lives in it. His son pays rent. His son's not disabled. And so there's no way for me to do it differently than just an investment property. The rate at 4.99 is high. I mean, we can definitely do an investment property lower than that. But the balance wasn't very big on it. And by the time that we're done with an investment property and points and fees and everything that goes into an investor's loan, which is totally different than a primary, we could do it, but it just really didn't make sense. So, and we were going to save him a little bit, but it was going to start him over on 30 years. And so he's thinking about all of the different options. Now, he could have really knocked it out of the park with an investor loan on a 15, but the payment would have gone up $200 a month. So that was really the one that he wanted to do. He would save so much. The rate did go down. And he's on almost a full 30 left on that one. So, he'd be dropping half of the time of the term. But because his son is living there and his son's the one making the payment, he really wanted to talk to the son, see if he has, feels comfortable making a little bit higher payment every month, So everybody's got a different story. And sometimes I can't get enough from an email. And sometimes I get enough that I have clients that have literally started with me by email, don't have time to talk on the phone. And we've finished by email. And it's just all been 100% written email communication. So it just depends on the person. But this one I had to pick up. I was like, there's too much here. It's a little bit confusing. But he reached out and he got the answers that he needed. And now he can, decide to make the changes, make the decisions and move forward or not. And he's on his way.
See what's best for him.
Right.
Exactly.
Absolutely. So the next one I had was, I got this one, and this is a good one for us to talk about because of the way that I had to answer it. So this one came from Monica, and she said, I saw your YouTube video on down payment assistance. I'm a DACA recipient. I qualify for any down payment programs here in California? So, DACA has to do with, their residency and, green cards and all of that good stuff. And, so I did respond to her, and I'm just going to read my response, and then we can kind of talk about it a little bit. So I said, hi, Monica, currently down payment assistance is a suspended program with the company that I work for. We do have it back, but it's not what it was. So I'm choosing to not write it right now. So basically, I'm just letting her know it's suspended. We are not currently offering it. The down payment assistance YouTube is an older recording that was prior to COVID. It will be back. And at that point, as long as you have a work visa and are legal to work in the U.S., there should be no issue. Visitor visas do not typically qualify. And she responded back, and thank you so much for the information. That helps me to know. So we talked a little bit about down payment assistance last week. And if you're interested in down payment assistance and you want to know more, you guys can either give us a call, get on my calendar. We'll talk about it. You can listen to last week's show. Like we mentioned, go to the YouTube, watch the video, listen to the podcast. It's all there. If you want to hear what we've talked about in the past, you can find it. It's really simple. But if you want to get into down payment assistance, what is the program now? You got to have a higher credit score than you did before. They're not giving nearly as much in assistance, but the fees are still the same. So you're walking away owing more than what you truly were able to actually get in your hand to help you. And so for me personally, I just don't feel like that's beneficial for the client. But it is still out there and it's being written, and it will be back and they'll fix it. And it's just right now it's temporary. They're, kind of getting their feet together and figuring out what's going to happen in the future and where's the economy going. And, it'll be back though. It will be back. But, that kind of brings me to, there's a lot of people that do listen that are resident aliens, or they're here on a visa and they're working towards their residency. We get that question a lot. Can we do loans for, somebody that is not legal? We get those questions a lot. So basically we have to verify employment. So you do have to be legal to work here in the U.S. Visas are fine. Work visas is really what they're looking for. If you're on a visitor's visa, the majority of those are not going to qualify for lending. So if you're questioning it, you've been thinking about buying something, you're here on a visa, you want to know if you can or can't get lending, just call us and we'll find out what you've got and we'll let you know what you can do. So it's, but there are loans. There are definitely loans.
Absolutely. And some loans just have different requirements too. So if you call us, we can always ask you what type of visa you have, what's the number, what's the, information, and we can look up and see what loans you would qualify based on that, and then go through the requirements for the loan.
Right. And we've got non-resident alien loans, so we've got non-resident loans, or foreign borrower loans is really what they call them, where you are not legal here and you're just trying to buy a property in the U.S. And we do have loans for those as well, but they typically require a much larger down payment, and you actually cannot have a credit report. So if you have any accounts in the U.S., you probably have a credit report and you're probably not going to qualify. So, but just call us if you're questioning it and you're wondering what you can do and you've been thinking about trying to buy something and you're not sure, if you could qualify. Just call us. It's simple. We'll talk to you. We'll figure it out. All right. So next one. This was a good one. I liked this one. And then we'll stop here because this one's going to take us a little bit. I have to actually pull the computer a little closer because there was a lot to it.
All right.
Yeah. And I'm going to start at the bottom where we started. That way I don't miss anything.
Okay.
Oh, there was a lot. I'm still scrolling. Okay, hold on. It might be easier to just get down to her first question because this one it kind of went back and forth for a little while. Okay, so she says, here we go. This is from Jessica. I currently have a $294,000 20-year at 3 3/4 conventional fixed loan. Last refi was November of 2017. Original loan was $325,000. Bought 7 years ago at $367,000 with a 30-year fixed. My basic question, is it better to refi to a 15-year to continue paying off our home as quickly as possible, or pull out equity for a down payment for a rental property and move back to a 30-year loan? So let's analyze that for a minute because there's a lot going on in what she gave me. And I love these questions because there's so much to it, and it's kind of hard to answer in all reality, right?
Yeah. Well, it's a very loaded question, right? And really two parts. Like, well, what are your goals first?
Right. Should I refi? Right. Should I refi to a shorter term?
Right.
Or should I refi and start over at 30 again, but pull out money to go buy something?
Right.
That is a loaded question. And that was exactly how I responded to her. And I literally said, I was like, wow, that's a loaded one. I said, let's see if I can find it. If I can find my answer. I'm not great at this because it's like going back and forth and back and forth. I can't find it, but I literally use those words. I can't find it. It's just too hard. There's like too much going on. But I told her, I said, it's really loaded, right? Yeah. Do you want to pay your home off? Is that your goal? Do you want to own investment property? Is that your goal? I think that you have to first go back to the drawing board and decide, what is my goal? What is our family financial plan moving forward? Is our plan to own a bunch of real estate, or is our plan to pay our home off in full? We don't want to be landlords. We don't want to own real estate. That's not part of our financial disposition, right?
Right. Yeah. I mean, they're two very different concepts, right? I have a primary, I want to pay it off. I want to be zero in debt with mortgage, or I want to pull out my equity and now have an investment because that's the path I want to go down.
Right. So we kind of went through all of the different things, which actually brings me back to last week's episode again. So if listening for the first time, as we're talking about last week's episode, we were actually like fully packed with information last week. But that was another thing that we had actually talked about last week was, if market values drop, should you refinance right now? Should you take cash out? Well, maybe you take cash out and you hold the money if you're going to go buy. If you're not going to go, you don't want to be a real estate investor. You don't want to get your hands on more real estate down the road or in the future. Don't pull out more money to pay interest on the money that's just going to sit in your bank account, unless you think that you have some sort of investment that you can go put that money in that's going to make you more money than the interest that you're paying on the money. So there's a lot of question marks around that. But again, you've also got to determine, one of the questions that I asked her was, do you see yourself staying in your home forever? Is this your forever home? Do you think that you're going to want to go buy another property to move into? And then if you do that, are you going to sell your house and then move? Or are you going to hold your house and rent it? And then you need money to go buy something else to live in? Or do you want to live in your house and you just want to be able to buy investment in the future? It was really, there's so much there that I can't be your crystal ball and give you the answers, but I can ask you a lot of questions to make you sit down and contemplate what your goals are and where you want to go and where do you want it to be. They say that you should have 30% of your money in real estate, 30% of your money in stocks, 30% of your money in something retirement that is not risk-based, something that's very steady. Annuities are a great place to have money. So everybody needs to have a financial plan and their portfolio marked out to where they want it to be. But let's face it, not everybody is an investor that wants a rental property. Not everybody feels like they have the wherewithal to be a landlord. Being a landlord is not easy. And, there's a lot of things that come up as a landlord. There's, tenants that destroy your property. There's tenants that don't pay. There's tenants that are fantastic. There's people that pay right on time. There's tenants that won't even call you when something's broken and they'll fix it for you. there's two sides to every piece, but being a landlord it is not easy. And, it's something that you have to determine whether you've got, the cojones to do that. Right. And I might get kicked off of, Go Country for using that word. But I mean, it's, it is something that's really hard to do. And you do have to have a backbone and a gut for it.
I got a message from Heidi that she suddenly cannot hear us.
Oh, no. I was wondering why she was just staring at me, not actually saying anything. Well, I don't know how to just reconnect Miss Heidi. So and we're close to actually kind of close to the end of the show anyway, right?
Yeah, we're about 45 minutes. Or 40 minutes in.
Yeah, we're about 40 minutes, 45 minutes in. So what we'll do is I will give you guys some information, and then we will cut the show short. And if anybody has any questions whatsoever and they want to get back in touch with us, they can absolutely do that. All you guys have to do is give us a call. It's 844-935-3634. That's 844 We Lend for You. That is LEND and the number 4. I would tell Heidi, since we're just on this, I don't have to go anywhere. Can she just get out of the feed and try to get herself back in?
Yeah, we could try that.
So why don't you tell her to just hang up and then try to call back in and see if she can get back through with sound. But if for any of you guys that do want to listen to the podcast, I was very serious. There's a lot of information there that you guys can get. Anywhere at all that you like to listen to podcasts, you can find us. It's Mortgage Mom Radio everywhere. It's mortgagemomradio.com. It's Mortgage Mom Radio on Facebook. It's Mortgage Mom Radio on YouTube. It's Mortgage Mom Radio on the podcast. If you guys want our phone app, the phone app is amazing as well. You guys can watch us on YouTube. You can listen to the podcast. You can apply for your loan. You can call us. You can email us. You can do it all through the phone app. All you have to do is text the word MOM to 36260. That's MOM to 36260. And that will get you our phone app. We will send you a link, and all you need to do is actually save that link to your home screen, and now you've got our phone app. So did we get her back?
I
saw us in, I saw us out. It doesn't sound like she's got sound, which is totally okay.
We can hear her.
We can hear her. She just can't hear us.
Yeah, read our lips.
Yeah. Make sure that your phone isn't on house party, because your computer, maybe there's something going on there too. Anyway, if you guys are looking for Mortgage Mom Radio, you want to get on the calendar, give us a call. It's 844-935-3634. We want you guys to watch us live on Wednesdays at 5 on YouTube. Put your questions into the feed, just like I read all of these questions today by email. I want you guys to be able to get those questions into the feed and let us answer them live for you. So I hope that you guys all have a fantastic weekend. If you're listening on Go Country, it is Saturday. The sun is shining. It is almost 8 o'clock. You guys go and have a great day. If you're going to work, I hope it's a good one. If you're watching us on Wednesday live, thank you so much for watching. We really appreciate it. And we'll be back next week. We hope you guys all have a fantastic one. Talk to you soon.
Bye.
Bye.
There we go.
There she is.